My name is Seewing Yee, and my special guest once again is Mr. Richard Advani, who is a top-notch real estate investment loan agent who does loans for investors in all 50 states. Richard Advani, thank you so much for your time. Today, we can talk about historically the greatest renters nation in the history of America. So this message is for real estate investors out there, whether you are a mom and pop real estate investor or a savvy investor, understand what's going on currently will help you become a better investor and your investment will be even greater. Now is the greatest renters nation in history. So let me go through 6 or 7 slideshow real quickly. Then I'm going to ask Richard to share his thoughts because myself, as a real estate network company, we help many investors over many years to buy cash flow properties across in different markets, turnkey properties over the years. And of course, Richard has done many investment loans for many years. So anyway, historical renters nation and the landlord can profit. Let me tell you why landlord will profit from this scenario. As recent as 3.5 years ago, the median price of a primary home is around $274,000 with a mortgage rate around 3.75%. And a person's principal and interest payment is $1,000. And the qualifying income to buy this property 3 years ago was a mere $48,000. If you fast forward to today, July 2023, the median price of a home is $412,000 with a mortgage rate around close to 7%. The principal and interest only, the mortgage payment today is $2,177. We're talking mortgage payment essentially double in the past few years. And a qualifying income to buy today's property is in excess of $100,000. As a result, the affordability index for primary home buyer is at a mere 87.8%. This means we are seeing a 40-year affordability low in terms of people qualified to buy a home. That creates a rental pool of potential renters for landlord investors out there. Hold that thought for right now. If you can, once again, if you look at the last 2 years, only the past 2 years, where the median price of a home is $400,000 at 3% mortgage rate, a primary owner-occupied property, principal and interest, monthly mortgage is $1,636. Now at 7% interest rate today, the mortgage payment is $2,500. This is mind-boggling. This psychological increase in all these kind of things has really turned everything around. So with that in mind, because of the rent growth, right now we're in a high inflation environment, the rental income, the rental rents is going to get higher moving forward. And the research done by Fortune magazine states that only 1 in 5 Americans think it's a good idea to buy a primary home. And also 21% of the US adults believe now is not a good time to buy because affordability aspect, the median home price has reached $436K compared to $329K pre-pandemic, making home ownership essentially unaffordable. Again, because of the lack of homes to buy, many of those primary home buyers are staying on the sideline, so they are competing against other renters out there. As a result, the rental income are projected to go higher moving forward per Alto's research. And as you can see, the 10-year home sales trends, when home sales decrease dramatically, as we're seeing right now, that put more potential buyers into the rental pool, right? And to recap momentarily, Richard, I'm going to ask for your thoughts. So here are the recap. Only 21% of the US adults believe right now is a good time to buy. Rising interest rates, soaring home prices have eroded American faith in the housing market. Home price increased dramatically in the past 2 years. Confidence in housing has declined sharply since the COVID-19 pandemic. Higher interest rate has made attractive home prices unaffordable for primary home buyers. Younger buyers, Gen Z, millennials, are postponing home ownership due to economic uncertainty and difficult saving for down payments. Real estate remains the best long-term investment. Richard, you and I know that because we've been in the investment business for several decades. But the margin over other assets has narrowed. I wouldn't go that far. Pessimism in housing market may deter first-time home buyers from entering the market, exacerbating the affordability crisis. Homeownership is seen as a crucial path to generational wealth building, but it is now at risk for many Americans. Relief is needed in the market to address affordability challenges and make home ownership, from a real estate investor's perspective, for existing real estate investors who already have rental properties spread across the U.S., and for newbies, real estate investors that want to buy property, thinking that cash flow right now is low. But given what I just discussed, Richard, and here's your thoughts, and you can recap in the next 5 minutes and we should be done. So do we believe, given these trends, given this conclusive data, even the cash flow today could be relatively low for investment properties? Would you feel confident that the cash flow will increase for investors? Not only that, do we believe that cash flow could be higher because there's so many renters are entering the rental pool? In my mind, we are seeing the greatest renters nation in history. And because there are lack of homes to rent, there are many more renters right now that need to rent. So they're bidding up the rental prices. And so therefore, the cash on cash returns and the future cash flow for risk investors in the next few years and beyond, in fact, in my mind, for decades to come, the risk investors will profit if they own a lot of rental properties because they could have higher quality tenants, higher rents they're going to charge, and more returns on investments, higher cash on cash returns. So everything is working out, everything is aligning perfectly for investors to pull the trigger right now, to position themselves to receive this highest quality tenants who's willing to pay a high rent, and the occupancy rates for rentals, for single-family homes rentals especially, will be the highest occupancy rate, the lowest turnover rates possible, and you can get the best quality tenant from those high rental pool. So therefore, by having high quality tenants, the wear and tear, the potential risk of evictions and renters trashing your homes are minimized as a result of all these situations. So go ahead. Okay, enough said for me. What are your overall thoughts, Richard?
Just what you said, right? With this country becoming a renter's nation and more people not seeing home ownership as a way to build wealth or something that they're interested in, it obviously makes a huge opportunity for us as landlords and us as investment property owners. What's interesting, and you hit on it as well, is people are afraid to leave their homes right now, right? People are afraid, renters are afraid to move because they don't know if they're going to be able to find another house to live in. And even with my own portfolio, we're seeing tenants stay longer and longer. We've had very little turnover the last couple of years just because there's no availability of homes. Look, whether you're renting, whether you're buying, whether it's hedge funds buying the homes, whether it's me or you as investors buying the homes, or whether it's a primary home buyer buying a home overhead, none of that matters, right? What we're short is roofs over heads, right? Because people tell me, like, oh, it's because the hedge funds are buying and this and that. It's because, look, at the end of the day, setting all that aside, the problem is there's not enough roofs over heads, regardless of who's buying them. There's not enough roofs over heads. And with more and more people, especially the millennial group and younger, saying, hey, home ownership isn't in our cards, high five. Great. I high five them. Maybe it's not good for the broader economy, but for us as investors, it's super worthwhile for us just because it's going to push more and more people, obviously, to renters. And as you said, whoever owns real estate and whoever owns a lot of rentals, as we move into the future, it's only going to get better and better for us.
Yep, absolutely. Home is a center of your universe. You have to live somewhere. You have three choices. You could become a owner of rental property. You can become a renter, or you can become homeless. Those are the three choices. A home is, like I said, is a center of the universe. A house is not like a stock. A stock is you can't see it, you can't feel it. The value goes up and down. It can go into a zero. But home is a shelter. It's a fundamental human being. It's precious. Having a place to live is just create a fabric of a high quality of life for someone, whether they are renting or whether they are landlord, whatever, because it's a fundamental aspect of a human life. So that's why a hard asset like real estate always has been, always will be one of the best asset class on historical basis. And history does not lie. The data are out there. Again, three choices. You want to become a landlord, a real estate investor, and profit from this historic renters nation that we will ever witness, or you can be on the other side of the fence. You could be a renter and pay someone else's rent, pay a landlord's rent, and the rent will go up versus inflation. So you're losing money whenever you're a renter. History, the data have shown, research has shown that someone who owns a home have 55% greater equity accumulation than someone who is a renter. We live in a world of have and have not. People own houses whether they are primary owner, whether they are investment property owner. Clearly, they are in a wealth building mode, whereas the other side of the fence, being a renter, it just does not financially pay off over someone's lifetime. So that's pretty much what we have. Thank you so much, Richard Advani. This is Seewing Yee. Thanks for attending, and we'll see you next time. Have a nice day, everyone. Bye-bye.